Now, let's talk about the next group. Indebted people. Anyone who has been reckless in dealing with debt. Look, debt may seem like a quick path to wealth. You can use it to maintain a high lifestyle, make big purchases, and even invest. But when a recession hits and the flow of money slows down, things can spiral out of control quickly. A clear example of this is the 2008 financial crisis, when millions of Americans got trapped in a storm of bad debt. At that time, banks were handing out loans like candy, and many people bought homes they couldn't afford, believing that interest rates would remain low and that home prices would continue to rise indefinitely. For a while, this seemed real. Everyone was living the American dream, thinking they'd made a great financial deal. But then reality hit. Interest rates went up, and suddenly the monthly payments doubled or even tripled. To make matters worse, home prices plummeted, so even selling the house wasn't enough to pay off the debt. Many families lost everything. They were buried in debt, with ruined credit, and their financial future compromised for years. What many people learned from this crisis is that debt doesn't care if you had a tough month or if the economy is in recession. If you don't have debt yet, the best advice is to avoid it as much as possible. If you're already in debt, your priority should be to pay off the high-interest loans, and never take on more debt unless it's a real necessity. Now, if it's truly necessary to take out a loan, whether to finance a business or buy a house, limit the debt to an amount you can repay, even in tough times, not just when the economy is favorable.